Good morning and welcome back to Almus Market Mornings, your daily dose of global financial updates. In a data light and rangy market situation yesterday, the Indian CPI data failed to make any major impact broadly, coming in as per expectations. Now, all eyes would be on the US CPI, and the participants would be keenly looking at whether the US inflation dips below 3%. Good morning, JK. How are you reading the Indian inflation numbers and your thoughts on the upcoming US CPI?
Good morning, Swaraj. Actually, this is a week of inflation, or rather, I would say disinflation watch, because market would be keen to see whether the price pressures come down further and make the policymakers, act earlier on the interest rates. CPI reports in US and UK will definitely be in the focus in the coming days. But in India, the inflation rate was already announced yesterday. Annual inflation eased from 5.69 in December to 5.10 versus the 5.09 forecast. Very little deviation from the forecast, of course. And importantly, the month-on-month number was on a deflationary trend, coming down 0.011%, although 0.03%, minus 0.3% was what was expected. And on the better news was the core inflation that dropped from 3.9% to 3.6%, and that's very encouraging as far as the central bank, policy makers are concerned. While the RBI is not likely to change any rate until the second quarter of this calendar financial year, but consistently coming closer to 5 or lower will be an added boost to the expectation of monetary easing, particularly once the global central banks start easing. Of course, close on the heels of the CPI, we also had the industrial production, which actually came better than expected at 3.8%. Now, the US CPI, of course, will be the first of the two numbers that FOMC will see before they meet next. The consensus is for index being up at 0.2%, on the headline number, and exported energy up 0.3%, both on a month-on-month basis. As far as year-on-year is concerned, 2.9% on the headline. That would be a big psychological shift, coming below 3% versus 3.4% that was expected last month, and 3.7% as far as the core year-on-year is concerned. So market looking out for the deflationary trend. Of course, we'll also look at the detailed services side inflation, etc. But definitely, if the headline coming below 3% will be what the market will be looking forward to as far as the asset prices are concerned, and also on the dollar. For UK, there are already indications from some of the MPC members, rather, that the inflation is going to fall even more drastically in the coming months. So that's what we will look out for when the number is published tomorrow. And with the UK already expected to be in a mild deflation, according to one more member, I think policy rate cut from UK will also be not very far off. At least I would say April to May is when we can expect, because it's also an election year in the UK. So I think policymakers will be keen to boost the growth, as well as being encouraged by lower inflation number. Of course, we'll also have some other indications on US inflation by way of PPI and the retail sales following on the Thursday this week. So this week is quite a busy week compared to last week, which was quite dull. In the European side also, we had two members who actually spoke quite strongly in support of the early rate cuts by the ECB. One, Mr. Sipolon, actually said that there should be no slack in the monetary policy, because there is demand that is weak and inflation expectations are well anchored. Another member, Penetta, said that macroeconomic conditions suggest inflation is rather disinflation is at an advanced stage, and progress towards 2% target continues to be rapid. So they're actually pressing for early rate cut, whereas most other members in ECB are on the cautious side. With these conditions, of course, markets did not really have much of a movement. Packets of movement was seen. We did see S&P 500 hit another new high yesterday, well above 5,000. Also, again, closing above 5,000. Nasdaq touched above 16,000 mark also, but the gains were given up maybe ahead of the inflation number. Some profit taking is seen. At these levels of valuation in stocks, you really need very strong trigger to move further up, despite the abundant liquidity still being noticed. On the bond, yields were slightly lower in the US session, moving more by position adjustments ahead of the CPI numbers. What made news, of course, was the Bitcoin that hit 50,000 level for the first time in more than 2 years, and it was up 5.6%, boosted by fresh inflows into the ETFs. On the currency, again, rangy market. Euro failed to break above 1.08, then pushed back into the lower end of the range at 1.0760. I think most currencies are awaiting the trend on the inflation and what it implies for the monetary policy from the central bankers. So that's where the trigger could lie for the currencies which have been mired in a ranges for a long time. Dollar yen, of course, is somewhat in a better trend, still weakening towards 150. That's how we feel. Of course, unless the CPI surprises to the downside, then again we may break back below 149 and move towards 140. So it's a larger range as far as the yen is concerned. Yeah, yuan is almost stagnant within a very narrow band, because the China is a long lunar holidays, which ends on this Friday, and they'll be coming back into the market next Monday only. By then, market also expect policymakers to come out with some strong measures to support the market as well as the economy. As far as the rupee is concerned, again, a very narrow-ranged market. Unlikely that we'll get any influence from the CPI. Right now, we are taking cues only from the flows, and the flows have been mixed as far as India is concerned. Strong outflows for the stocks, but good inflows for the bond market, and that overall it's well balanced. But I think still lacking an impetus for a direction either side. At least until today's data from US, we should be confined to 82.95 and 83.05 at the most. Thank you.
Thank you, JK. And I think you summarized it pretty well. It's a week of disinflation watch. Now, when it comes to data, Indian inflation eased from 5.69% to 5.1%. Core inflation dropped from 3.9 to 3.6%. So it's a little positive on the Indian front. And of course, eyes will be on the US CPI, which is expected to be at 2.9% headline on a year-on-year basis. So that's a big shift from and a print below 3% for the number. When it comes to equities, S&P 500 hit another new high, while currencies have been rangy. Nothing spectacular for the rupee, which has also been rangy. Ahead of the inflation data, we expect calm markets. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.